Hello. Thank you so much for joining us. I'm going to give it just a couple seconds so that all the participants are welcomed in. My name is Kelly Nerick, and I'm the Senior Director of Products and Services with the Small Business Association of Michigan. And as you may have read in recent news about the Corporate Transparency Act, it mandates that certain entities report their beneficial ownership information to FinCEN. These requirements are confusing and penalties for noncompliance can be severe. So I'm very pleased to welcome our approved partners, Occam's Advisory, to explain who needs to file, when the reporting deadlines are, and where you can go for help, including a new member service for SBAM that is BOI reporting, simple and affordable. So you're currently muted. However, we do encourage you to use the chat feature as we go along if you have any questions. And then at the end of the presentation, we'll open it up to unmute you so that you can ask questions. So without further ado, please go ahead, the team at Occam's.
Thank you so much. It's so nice to be here. And good morning, and I think it's good morning everywhere. So thank you so much. Yes, the Corporate Transparency Act is our focus today. And today, my name is Amber. I will be the facilitator today. I'm the VP of Affiliate Origination and Management. And we love to be able to share things with SBAM members. And so thank you so much. We do have a special guest. Our CEO and founder, Occam Satashil, will be here joining us as well, giving us his insight. We have some really great experts on our panel today as well. And David King, our Deputy CEO, Nadine Nasser, she is our Corporate Counsel, John Bruner, who is VP of Tax Advisory. We have them today joining us with their expertise. So Kelly, thank you again so much for the warm welcome. Today, we're going to talk about our agenda on here. We're going to talk about defining CTA, who must comply, the details, the reporting timelines, any penalties, and then the solution, okay? Before we get started, I want to make sure that everyone knows, and just to kind of piggyback off of what Kelly said, we have limited time today, but I want to make sure that everybody who has questions have the ability to put their questions in either the chat, I believe the chat or the Q&A. Kelly, did you? Okay. Yeah. And we will answer those at the end of our presentation. Just for time's sake, we want to be mindful of everyone's time who's on the call. So if we can hold the questions till the very end, but please ask questions because that's what we're here for. That's why we have our panel of experts. Before we get started too, I want to make sure that everyone understands what the CTA is, or the Corporate Transparency Act is, and why it matters. This was a U.S. law that aimed in increasing transparency in business ownership to combat illicit financial activities such as money laundering, terrorist financing, and tax evasion. Now, I know everyone on the call is probably thinking, well, that's not me. We totally get that, but it's still a requirement that was enacted by the Money Laundering Act of 2020, and it was taken effect in January this year. So one of the key provisions is the businesses are required to report beneficial ownership information to the Financial Crimes Enforcement Network, or FinCEN, which we'll talk about here shortly, a bureau of the Department of Treasury. FinCEN was created to combat these crimes, collecting, analyzing, and sharing financial intelligence, enabling transparency between banking, real estate, and small business, which is why we're talking to you today, because small business is being affected by this. Now, you're probably thinking, okay, I don't understand. Why does this matter? There's some costly statistics. Money laundering, for example, that's just one of them, is a significant issue, costing over $1 trillion annually. It's known to support drug cartels, illegal arms dealers, fuel global terrorism, making FinCEN a very necessary agency to protect our financial system. Now, today we're going to talk about who is affected, and I'm going to ask my one of my peers and one of my experts, John Bruner. He is our tax advisory. Actually, just kidding. I'm so sorry. So sorry, you must comply details. Give me just a second because I don't know why the pages are not right. Um,
It's fine, Amber. I think it's John after you, so he can walk you.
Yeah, Amber, I can hop in and we can talk about who must comply. That's no problem. Thank you. And hello everybody. My name is John Bruner. I'm one of the VPs of our tax advisory division here. So we work within the BOI reporting alongside SBAM and all of you. So thanks for having me. Talking specifically about who must comply, looking at these requirements, most U.S. corporations, LLCs, and other entities that were created by filing documents with the state or tribal authority must comply. Additionally, foreign companies registered to do business in the U.S. are subject to this rule. So there's quite a broad list of who must comply. And according to the most recent data, it looks like there's actually 194,000 small businesses in Michigan with fewer than 20 employees. So just like you guys, a lot of you on this call, small businesses make up a significant portion of Michigan's business landscape. So there's a lot of people that must comply with this. The small businesses represent about 80% in the state. Notably, some exempt entities include publicly traded companies or large operating companies. That's people with over 20 full-time employees, 5 million in revenue, and also have a physical office in the United States. Banks, insurance companies, and other regulated entities are also exempt as well.
Thank you, John. There's additional details. Yeah, if you could share.
A few details here on actually how to get this reporting and what you're required to report. So companies must report the personal information of their beneficial owners, which is a key term to understand here. Individuals who directly or indirectly control or own at least 25% of the company or who exercise significant control. Significant control is a little bit of a blanket statement, so we'll dive into that in just a second. But what you must, if you're a beneficial owner, what you must actually report is your full name, your date of birth, your current residential or business address, and then a unique identifying number from an acceptable document. Usually that's going to be something like a passport or a driver's license that's registered with the government. Which individuals are beneficial owners, right? Beneficial, as I said, it's a little bit of a blanket statement. What does that exactly mean? Again, here's another kind of vague term. Directly or indirectly exercising substantial control makes you a beneficial owner, or directly or indirectly owning or controlling 25% of ownership interests in the business. So a few examples of that: husband and wife, they're owners of a general store operated as an LLC. Clearly that's going to be over 25% ownership. So there's qualification there, meaning you have to report for BOI. Also, the COO of a 10-person tech company operated through a corporation. That'd be an example of someone who's directly or indirectly exercising substantial control. And then lastly, the chairman of the board of a UK-based multinational corporation with United States sales and support operation. The key there is the US sales and support operation. As I said earlier, foreign entities are exempt, but because there's a US sales and support operation in this instance, there is a precedent for substantial control by the chairman of the board, so they must report as well for BOI reporting.
Thank you, John. That's a lot of great information. Now, in addition to that, Anupam, thank you so much for joining us today. You're going to share with us what ownership interest is and what that looks like.
Of course. Thank you so much. Hello, SBAM people. How are you? I know most of you are on mute, so I'll miss out on the response. This page and the next page has a lot of details. I would suggest that instead of diving into it, which we of course can do on one-on-one basis if required to help you out with your unique situation, the general concept is to get a little deeper understanding of why it matters and why it matters for you. The ultimate objective of FinCEN, which regardless of its nice, cute acronym, actually is a crime prevention network. But most of us are old enough to remember what happened on 9/11/2001. Terrorism can be very harmful for the country. So can be drug cartels, so can be trafficking. And the government, in its infinite wisdom, which I'm saying with a bit of a smirk, tries to make rules which apply to many people or most people with the objective of basically bringing to books the people who are willfully bending or breaking rules. I know most of you, all of you are not doing anything strange, but the government has no way of knowing that. So essentially, they are putting the restriction on everyone that they have to report. Why the smaller companies? Because typically the people who are doing strange things tend to run small 1-man, 2-man, 5-man companies or 5-woman companies. They don't have large 25 employee company because those are in limelight anyway. They have employees, they have payroll taxes and other reportings. So this chart talks more about specifically of the kind of equity ownership which gets into reporting requirements. So is it a straight equity? Is it a stock option? Is it only because of voting rights? Because corporate law can get pretty, complicated. And that's why we're here to make it easier for you to follow our system and get it done easily. So like towards the end, you will see option or privilege. Now, these are not straight up equity. Smaller companies typically have a straight up equity, just 1 or 2 owners, but complex entities tend to have all these details. And I mean, terms like put, call, straddle, not something which a common man knows. I don't expect a 5-employee business owner to know those terms, but the government has made rules which obviously cover the entire universe of ownership. Let's go to the next slide, Amber. So apart from people who own the company, they also want to have accountability for people who are senior officers. There could be companies where the owners are hands off, or they are offshore, or they are not really capable to run the company, and instead have got officers and managers to do things. So it's the requirements for them, which again, we take care of. So I'll turn this back to Amber with the specific suggestion that this is something to be taken very seriously, because unlike an IRS or some other DMV or local police, FinCEN does not operate by trying to remind you of deadlines. They set a rule and they sit back and watch. And if somebody is not in compliance, they can really strike hard. And as you will see later on, the penalties can be pretty severe. The cost of compliance is very small. The cost of non-compliance is very high. So with that, I'll turn this back to Amber for the next section.
Thank you so much. Yeah, that's a lot of great information. And there is a lot of things to go through there, but we're here to help. Our next information is reporting requirements. And I'd love to introduce David King, who is our Deputy CEO. David, can you go through the reporting requirements for us?
Absolutely. Good morning, SBAM. I've just realized that I've come up as Anupam. I'm not, it's actually David King I clicked on the link and I didn't want to go out in case I couldn't get back in, but yes, Amber, I just want to reiterate the information that you have to give is what John went through earlier. That's basically your name, your date of birth, your address, and some form of identification. And any changes in your ownership or control must be reported within 30 days. Now, this kind of applies, if you can go to the next slide, I just want to go through this because most of you would have formed your companies that they already in existence. So companies that were created or registered before the 1st of January have until the 1st of January of next year to submit their BOI. Companies that were formed within this year have 90 days to report. So if you formed a company, for example, in February, you should have already done this. Otherwise, you're gonna get the consequences. Companies founded or registered after the 1st of January. So any new entity that's formed, you have to basically report within 30 calendar days. Now, any changes to the ownership in going forward need to be reported within 30 days. So please be cognizant of that. So a lot of people feel like this is government overreach and they're just trying to find out information about your companies and sort of get their dirty paws on your information. But there are some serious consequences to not complying with this. And you guys need to be cognizant of that fact. So Amber, if you can go to the next slide. I wanted to take a second here to tell you, please take this seriously. Lean on us to help you do this. You've got a great deal through SBAM because of our relationship. We've done a lot of work with SBAM over the last couple of years, but here are the penalties. Your civil penalties is a fine of $591 a day for non-compliance. Now, I don't know how they came up with $591. It's a very specific number, but that's that's onerous. So think about it. If you don't comply for 30 days or 60 days, that fine is going to be significant. Criminal penalties, you get a fine of up to $10,000 or 2 years in prison or both for willful violations. So it's serious. Non-reporting, false reporting, or incomplete information can severely impact your business. So you guys you need to take this seriously and you need to get it done because it has dramatic consequences for your business. And we're here to help you. So please ask the questions in the chat and let us answer any questions that you have.
Thank you so much, David. Yeah, there's a lot of penalties there, and it can be quite scary. So I'm so thankful that we're able to help our SBAM members. Now, the next, we're going to ask our corporate counsel, Nadine Nasser, to join us and go over the BOI regulatory and legal updates.
Good morning, everyone. So as of August 2024, we know that approximately 2.7 million BOI reportings have been filed. That is just 8.3% of the total amount that should be filed or is expected to be filed. That number should be 32.6. Sorry for the typo, not 33.6. In March 2024, we know that the National Small Business Association, VLN, that's a case in the U.S. District Court for the Northern District of Alabama, ruled that the CTA was unconstitutional. An important thing to note, if you're relying on this case, it's not binding on most businesses. So members of SBAM will likely have to file. The DOJ is appealing this also. So it's not a final resolution yet. Regarding SBAM's lawsuit to protest the BOI, there is a hearing for both parties' motions for summary judgment. That'll be December 16th, 2024, but don't expect a decision until well after the new year. U.S. Secretary of Treasury Janet Yellen has stated that FinCEN will not extend their deadline. So please don't hold off on filing until after the deadline because it's not going to be in your favor. Most legal challenges will not be concluded by January 1st, which is the deadline. Now, if you were affected by a natural disaster, check with us because there might be extensions for your particular situation, depending on which disaster it was, if it was Hurricane Milton or something like that. Let us know and we can give you specifics on that. Some sources have conjectured that there is less than a 25% chance that the CTA will be repealed by the new administration. So don't rely on it. The penalties are not worth it. Thank you, Amber.
That's great. A lot of information. And I just want to make sure that everyone knows too, we're sharing these details just because obviously not a scare tactic or anything like that. It's just a lot of people don't know. And we found that so many of our clients did not know. And we were so thankful that SBAM has been very forthcoming to their members about this regulatory issue. Now, to be clear, the Corporate Transparency Act is a law that has been put in place, and the beneficial ownership information, or the BOI, is the data that is required to be filed under this law through FinCEN, which Anupam talked earlier about. So I just wanted to make that very clear. And the deadline is approaching, as you see here. Now, to make everything easier for you, obviously the reason why we're excited to talk to you today, to make the process easier for you, we have sophisticated, streamlined self-service software solution, that's a bunch of S's there, that automates BOI reporting. With our software, you can complete the requirement filing seamlessly and efficiently. This gives you the ability to save time and avoid all of these costly penalties that we have just been discussing. The solution will also reduce the burden of this new requirement because it's a lot of information and you don't want to, as Nadine said, you don't want to wait, and you don't want to just see if it doesn't affect you, because it will affect you if you're one of the required businesses. It keeps your business compliant without disrupting any of your operations. So fully automated software can handle all BOI filings, beneficial owner management, and statistic updates. We have expert compliance support, so we support you if you have any questions, but our software does all the work. It is truly self-service. So with our SBAM partnership, the proprietary software link guide you through the BOI reporting to ensure full compliance. It is a streamlined process, so it's step-by-step assistance, and it reduces the risk and reducing your risk and severe penalties. Our tailored solutions are unique, and it is a proprietary software that is automated to personalize to your needs. It depends on the information that you put in the system, but it is very streamlined and easy, reducing the burden from you. Now, we are super excited to announce that because you are an SBAM member, we are giving SBAM members a 40% discount. Now, what does that look like? Currently, our one-time fee is $79, but we are allowing SBAM members, our friends at SBAM, a $47 one-time plan. Now that's 40%. Now you're probably looking at each of our plans wondering what I would need a subscription. Now, let me just be very clear. The one-time is one-time access to our software. Let's say I have an LLC and it's just me and 2 other people. I don't have a lot of changes. I haven't made any changes in 10 years. I'm not thinking about making any changes. I'm just going to file with FinCEN. That's who would do the one-time at $47. The 1-year subscription would be if I was that same client, an LLC, but I know that I'm going to be hiring a COO soon, and I'm probably going to move my office, and it's not going to be for a couple of months. I would want the 1-year subscription, so I have the opportunity to change that within 1 year, and that's only $59. Now, you can understand the 2-year and the 3-year subscription would be kind of the same thing. So if anybody would foresee changes in the near future in 2 years or 3 years, it would be important for you to do the subscription. That would be a really great opportunity for you instead of purchasing it every time. It wouldn't make sense. So if you wanted to do multiple EINs, we also have that opportunity as well. It's a max of 10 EINs if we go through the premium subscription. Now, we're super excited about this discount for SBAM members, and we've had the ability to offer this. Now, I just want to be clear, there is a sense of urgency, as everyone has spoken this morning, but our SBAM pricing is truly just for members only, and these prices are valid through the end of year. Due to the severe penalties and the risk increasing for everyone, there may be an increase in pricing. So we want to make sure that everyone understands that there is a sense of urgency there because of the deadlines. Now, we've gone through a lot of information. We understand what the Corporate Transparency Act is. The penalties are severe. You understand what needs to be done. We offer a fantastic solution with our self-service software that is just proprietary through us. Now, we wanted to open it up for questions. I know that I always love to bring on John Brenner. Thank you so much for helping me with the Q&A. I think there are some questions in the chat. If you can help us with the Q&A piece, because I know we went through a lot of information today and we want to make sure that everyone gets their questions answered.
Thanks, Amber. Yeah, there's a lot of questions, understandably, because again, as David said, the penalties can be quite severe for this. So thanks everybody again for joining, and we'll do our best to get everybody's questions answered. If you have more, please continue to add them to the chat. And of course, if you can't get them, you can either connect with Kelly or with us directly at Occam's, and we can help answer your questions via email or the phone after the fact. We're here to help you is the answer here. So the first question we're going to go through is actually we're a little bit longer. So Donna Goldthorpe, thank you for the question. Rajat Garg is going to be answering these. Rajat's one of our specialists on the BOI reporting. So Donna's question is in the chat. Rajat, if you can read it, I'm going to read this out loud for everybody. The question is, with her background info is pretty long, so stay with me here. In 2010, her husband filed a Form 8832 and received a single member LLC status along with an FEIN for a partnership run business. The IRS removed the requirement to file Form 1065 at that time. Each year, the income was reported from the partnership-owned car wash, was reported to 1040 Schedule E. On July 1st, 2024, the car wash was sold to the same partners, to an S Corp owned by the same partners. There's no BOI return for the single member LLC as the partner has been filed. hasn't been filed yet. Since it was sold this year prior to any BOI filing, is it still required to file an initial BOI return and then file a follow-up filing to terminate the liability to file? Is there a requirement to file something with the IRS to terminate the single member LLC? So again, quite a convoluted question. If we can't answer it fully on this call, Donna, we don't have time for everybody or to get to everything on this probably. But if we can't figure it out, we'll happily connect with you afterwards. Rajat, can you give the quick answer to this as best as we can?
Yes. Hi, Donna. Thank you for joining. So I'm understanding you're asking two questions. One is if the entity was sold during the year, do you have to file it? So the answer is if the new owner has already filed, you don't need to file it. The new owner with the the new owner can file it with the details of the new owners. So you don't need to file it. The second question, is there a requirement to file something with the IRS to terminate the single member LLC? Yes. So once you're terminating your business, you have to terminate your EIN as well. For that, you have to submit a form with IRS. We can touch base on that if you want that. John, we can move to the next question.
Got it. Hope that answered Donna. The next question was from someone anonymous asking about reporting exemptions. Let me know if I did not answer that in the chat, but I did talk about reporting exemption entities. That includes publicly traded companies, large operating companies as well, which are companies with more than 20 full-time employees, over 5 million in revenue, and a physical office in the US. Also banks, insurance companies, and a few other regulated entities are exempt as well. That same question kind of rolls into the question from Debbie here. Or no, is it Debbie? It's yes, Debbie. She says, I know to report the president, 100% owner, and the vice president, which is the owner's son, but would I have to report myself as the controller? Debbie looks like she has signing ability with banks and can enter into contracts. She's wondering would the other owner's son or the owner's other son need to be reported, who's a sales manager? She's not sure if they're exempt as well. They have over 100 plus employees and over 5 mil in revenue. Can you clarify that, Rajat? Do you see the question here in the chat?
Yes, Debbie, to answer your question, yes, if you are more than 20 plus full-time employees and more than 5 million in revenue, you are exempt. So your entity is exempt here. And if you have any questions, I think there was one more question for the exemption. So if you'll go to our website, boireporting.io, on the top right, we have an exemption checker. You can just go and check if your entity is exempt or you need to file it.
Great. Again, that website was boireporting.io.
Correct, yes.
For everybody listening, if you're looking for any more information, that's a great place to start. You can connect with us directly there. But if you forget all about this tomorrow and wake up and you're concerned about BOI reporting, boireporting.io is a great place to start. Let's see here. Corp. We're going to get to your question here. So she's 1120 S Corp to K1 to trust. Then the corporation has a president and a vice president. She's wondering if all three would be beneficial owners. Rajat, if you can answer that as well, we might need a little bit more information from Lisa here.
Yeah, I think Lisa will need more information to particularly answer this, but if we are talking about the beneficial owner and the substantial interest, all three, because they are the holding VP and the president status there, so all three has to be the beneficial owner and all have. So it will be one filing for the company, and the company will report all the three beneficial owner. It's not like that you have to report three. You have to do three filings. Your company has to do one filing and report all the three beneficial owners there.
And again, boireporting.io, for those of you listening, we can help answer this. Our software is built to help streamline this process. And I think that a lot of your questions will be answered if you dive in and start going through that. Quick question from Jaime Mosqueda. Will the presentation documents be shared? Yes. Kelly's going to email the presentation slides and this recording to everybody here. So if you have any thoughts or want to review this with other members of your team, maybe your president or someone like that, we'll get that to you. So no worries there. Let's see. We answered Debbie. Stephen Cummings is asking, as an LLC sole proprietor, how does this impact me?
So Stephen, I think LLC sole proprietor are two different things. If you are a registered LLC with any state, most probably in Michigan, you have to report BOI reporting. But if you are just a sole proprietor, not registered with any of the secretary of the states, you don't need to report BOI reporting. Hope this.
One more question here from Anthony Bowden. He's asking if an LLC was created before January 1, 2024, but was closed down in 2024. Is it exempt or does it need to comply?
They need to comply. Any business entity that was dissolved in 2024, they have to report this. But if the entity was dissolved before 2024, you don't have to report. But if it was dissolved within 2024, you have to report it.
Okay, so this does look like it needs to comply. He says it was closed down in 2024. So the answer there, Anthony, is yes, you do need to comply. Let's see. Jeff Welsh is asking, what's the additional cost for EINs greater than 10?
So we have a like a premium plan for that. You can just register on our website and we can discuss the plans with you.
Okay.
Depending on
that works. Lori Hayes is asking, what is the purpose of the software? Can't all this be entered on the government website?
I'll take
yes.
that
Yeah, go ahead, Anupam.
question. If you can, Lori, and anybody else who wants to go on the FinCEN website and figure out the exemptions and the applications and the applicability of the rules to you, and you feel comfortable that you understand the rules well enough, more power to you. Absolutely can do it yourself. It's a question of, are you going to spend, let's say, give or take 2 to 3 hours for a person who is reasonably familiar with government regulations, specifically FinCEN regulations, and do it yourself? You can do that. Now it depends on what the opportunity cost of a couple of hours is. If $47 are worth 3 hours, then you probably will just use the software. But if you want to do it yourself, you absolutely can do. And there is no reason for you to, in that case, to subscribe to our software. And also please remember that the requirements at the back end can change. So let's say there's going to be a new government. It seems like the Senate and House also might be with Republicans. And if they decide to make changes, like increase the exemption list or make any other changes, you'll have to go back and read again. And this will be something you would do every single year. And then if you form a new company, then you have to do it again. So ultimately, it's your decision. We use many softwares on a daily basis for things which we can do ourselves, but the software is supposed to make it easier and take away the burden of compliance from you so that you can save time and do other things. But yes, you can do it yourself, or you can save time by taking the software.
Yeah, I think the biggest point there, Anupam, I think is great, is time saving, but there's also penalties on wrong filing. So you want to make sure that, you know, you're doing it right. So I agree. I think there's a lot of great opportunities with the software, and it's super simple.
Just to state this in a different way, I understand most of these things pretty well. I run this business for the last 12 years. And still, I always go to a software. I don't try to read the rules for myself. I absolutely can, but it's not worth my half a day to understand those rules.
Yeah.
I think that answers all the questions in the chat here. So with that, we'll slide it back to you, Amber. Thank you everybody for asking questions. I see actually one more just popped in before we close this out. This will be the last question. So again, boireporting.io, that is in the chat. This last question is from Larry Baumgart. Do firms have to do this every year or only once, and then when changes are made?
That's correct, Larry. So you have to do it like one time now, and if there is any change, you have to do the reporting within 30 days of that change. And changes we are mentioning about, if you have a change in your address, business address, you have a change in your beneficial owners, or if you have a change in the address of the beneficial owners. If there is any change, you have to report that.
Okay, thank you. Amber, let's finish this off. Thanks everybody for joining.
That's so great. Thank you guys. I know we're 6 minutes past our time, but thank you guys so much for letting us answer everyone's questions. And again, if we weren't able to answer your questions thoroughly, please let Kelly know and she'll direct them to us and we'll get your questions answered. But if you follow the QR code right here, it takes you directly to the software, or you can copy the link here. It looks like the A is misplaced. I don't know. But if you use the QR code, it's super simple. It allows you to go directly to the software. So you can get your discount right on the software. It helps answer questions. And I know there was one question that we have been asked outside of SBAM that I thought was important. So if we have multiple business owners, so John, if you and I were owning a business and you entered the information first, you could just add me and then I enter my information. I don't have to go back through and enter all of my business information because you already did it. It's super simple. So if that was a question that we've gotten a lot. So if there's multiple business owners, not everyone has to do it independently, but they could do it jointly. So that's something that's really important to say. But it is www.boireporting.io. And please let us know if you have any questions. Kelly said that she is going to send out the recording and send a follow-up email, correct, Kelly?
Yep, I have the slides and the recording. I will send after we wrap up here today. And I just want to thank the team for joining us. Some of you may already be familiar with this partnership. They helped our members with the employee retention credit. Definitely expert, trusted source for SBAM members. And we're just so happy that they have the service available at such a deep discount for our members at 40% off. And again, I walked through the online process. It's very simple, very easy. There's no questions along the way, and you can be confident that you've filed the correct information, so there's no fear of penalties. So thank you again, everybody. I appreciate your time, and I hope you have a great rest of your day.
Thank you.
Thank you.